What's up, guys? Raymond with another video. Today we're going to be continuing from yesterday, analyzing the market, checking if there's any losers or gainers. There will be losers and gainers, but we're going to check if there's any viable investments. So let's go straight into the losers. So we have a stock called Vegans Group. That's gone down by 46%, but it doesn't have any financial information, so we're going to leave that one. Let's go into so Snapchat's gone down by 29%. Let's check how much it's gone down by the throughout the year. So throughout the year, Snapchat's decreased in value by 68%, which is a large amount. So if you check Snapchat, the market cap is still 38 billion, which is extremely large, and considering that the value has gone down by 68% in the year. So let's check the financial information. So this might actually be the reason why it's gone down. So you can see here the pinkish column is the revenue figures. That represents the revenue, the income, and the bluish column, the smaller one, is the net income. So as you see, it's below the median bar, which means it's net income, which is the profit, is actually negative for the year and for the past 3 years, actually, excluding this financial year, which is really bad. Of course, it means the company's not making any money in terms of operating income. In terms of net operating income. So let's check the cash flow statement. I'm going to skip the balance sheet just for now, just to check if it's made any net change in cash. So the net change in cash is 1.45 billion for the last financial year. The previous financial year is 25.58 million, and the previous is 132 million. So it's made a net change in cash positive. So overall, the company's adding value to its the company's growing in cash terms. Let's see where it's coming from. Let's go into the balance sheet and see. Let's just check its debt to asset ratio. So the debt to asset ratio is not too bad. It's actually lower than 50%, which is actually pretty good. We don't need to worry about the company holding on too much debt, especially with regards to social media platforms. They tend to be notorious for not having too much debt. Some of them do have a lot of debt, but rarely do they have a lot of debt. But it's mainly other companies that deal with physical assets that have a lot of debt. So let's check where this net change in cash is coming from. So the revenue figure is 4.12 billion, and the net income is negative 487 million. So let's quickly dive in to see where this net change in cash is coming from. Let's check the cash flow statement. So we start off the cash flow statement. So the cash flow statement is the last financial statement in all three financial statements. Some people argue it's the most important. So let's start off with the net income, the starting line, which is negative 487 million. The cash from operating activities, so the cash from operations is 292 million, and the depreciation, it's 190 million. Non-cash items 857 million. Cash paid in taxes paid. So changes in working capital is negative 195 million. So cash from investment activities. So So the company's made some investments and they've made cash flows of 160 million. And let's check the cash from financing activities. So from financing activities, the company's gained 1.14 billion. So that's where most of the money is coming from. So they've retired a lot of stock, which is worth 14.6 million, and they've retired a lot of debt. So they've gotten rid of a lot of debt, which has caused them to free up 1.14 billion euros in cash. So the company's growing in a lot in cash terms, simply because it's got rid of a lot of debt, and it's also freed up a lot of stock. So let's also check. I would definitely say that this is not too bad in investments, considering it's gone down by quite a lot. Considering Snapchat is quite a large social media platform, owned by the Meta Group. Actually, no, sorry, it's not owned by the Meta Group. Forgive me for that. It's not owned by the Meta Group, but it's quite a large company, and it's definitely reputable. So I'll definitely say it's not a bad company, considering all the financial information. So let's move on to the next one. So it looks like that's actually quite. We're doing this analysis quite early in the day. It's only 12:55 Greenwich Mean Time, PM. So we're doing it quite early. So that's probably why there isn't too much financial information. Also considering there aren't any Americans. Well, there are American stocks, but they're not they're not, the American stock markets are not opened yet. They open at 2 p.m. Greenwich Mean Time, so you won't see any American US stocks here. So you won't see any US stocks denominated in the US currency. So as you can see, Snap is a US stock, but it's not denominated in the euro currency. So yeah, Snap is the only one we've seen that's a viable one. At least you've seen one. Yesterday we didn't see any. Some days you might see none. Some days you might see some. So let's go into the top winners. Not that we're going to choose anything from there. So short in Facebook. Let's see what that indicates. That probably means Facebook's gone down, or Meta, as we should call it. So we can't check the stock price of Meta right now because the market's not open. So let's just stick with what we found, Snap. And I think I'm probably going to invest some money in there. And yeah, that's just an overall guide, or an in-depth, well, not an in-depth, but a general guide into how I find stocks to buy, or to put money into, based on its decreased value. And yeah, I hope you guys have got some value out of that, and maybe you can implement some things you've seen in this video into your own trading or investing activities. And I hope to see you in the next video. The next video, I aim to make it a little bit different, and I aim to make each video a little bit different just so it's not boring. But yeah, I hope to see you guys in the next video, and have a good day.